Hello guys, and welcome to the Trading Opportunities webinar. Again, this is Nirav, and before we proceed, let me just check the microphone and everything at my end. And of course, if you guys are online, make sure to say hi in the chats section while I set up everything. Okay, looks to be working fine at my end at least. So, guys, finally, welcome, good morning, good evening, and good afternoon to you guys, and welcome to the 59th edition of our trading opportunities webinar. And in these webinars, what I do is go over the charts of EURUSD, crude, gold, S&P, Nifty, BTC. We have been doing this for quite some time, and as you can see, scrolling at the bottom of the screen, we have already captured 68 big trading opportunities in the last 56 webinars. We will see last 56. I need to probably correct that to 57. Yeah, anyways, we will see what happened with the 58th webinar in today's edition, and also see further trade setups on the said instruments. So without any further ado, let me just very quickly get started with the legalities, and then we will move as fast as possible towards the actual content. So first of all, here on screen, guys, is the disclaimer suggesting that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the presented views for trading or investing or any other purpose, you yourselves will be liable for your profit, loss, or loss of profit. Very quick about us for those of us who are new to this webinar series. So, guys, my name is Nirav. I'm the admin and owner of 50eyes.com website and the 50 Eyes Market Analysis YouTube channel. Here, I have been presenting my views on markets since 2016, actually 2015, but the activity actually started afterwards, a little bit afterwards. So far we have done 58 of these webinars and caught 68 trades. You will see what happened in the 57th webinar today. And the way we conduct these webinars is we go live on every Friday at 2 p.m. GMT. So if you want to join in live, if you want to ask questions, then that's only possible during the live session, and you have to join it at that time if you are watching it as a recording. I'm also the author of the book Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott Waves. And lastly, before we proceed with the actual content, I also hold an accuracy or unmatched accuracy of 80% plus for 6 consecutive years. The spreadsheets are actually the webinars dates with the instruments discussed in the webinar, the analysis done, the video links. Right. So everything that worked is given a +1. Things that did not work are given a -1. So on and so forth. We have calculated these accuracies. As you can see, 2021 we had 82.22%. So on and so forth. Let's scroll at the bottom. 88.52, 2020, 2019, 84.88. 2018, 84.61, 17, 87.5, 16, 83.34. So with that out of the way, let's now head over to the actual content and see what happened with the trade setups we discussed last time and some new trade setups if they are forming. So first of all, on screen, let me just quickly push it here. So first of all, on screen, we have the chart of Euro USD. What we see over here is that we discussed last time this as the count. I have actually not touched this chart. This has been left as it is for the sake of showing what happened with the analysis. So the idea was that we were expecting that wave W up will be followed by X down and then another leg up for wave Y. And when we did the actual analysis, the last time the date was 7th April 2023. So that means the market was somewhere here. Okay, somewhere here. So the idea was that it is continuing most likely as a wave X down and will be followed by a wave Y up. It literally did that. It completed the wave X down and then it went up for what looks to be a wave Y up. Not only that, it has achieved the minimum expected target, which was this violet line at 1.10152. So if you were attending the webinar and you were serious enough in trading this market, you had gotten a clear opportunity here, which actually happened right after the market. It actually reversed after the market was after the webinar was complete. I mean, so this takes over tally. By the way, I have to remove this. Yeah, so this takes our tally of a number of trades that have worked in our favor thus far to 69 in the last 58 webinars. And by the way, if you are in the webinar currently attending it and were able to capture this or were able to see this live when we were discussing it, do make sure to let our subscribers and viewers who will watch this webinar later know by tapping in the comment section. Okay, so with that out of the way, what we have now is one trade complete. So let's see how we can program ourselves, not program, how we can position ourselves for the next trade on this counter. So first of all, this wave I think may have more upside remaining, right? Because it has already broken above the important high of 1.1039, right? So because it has already done that, it is possible that the wave I will go sideways a little bit and then up for the expected last leg. Now that's one way of looking at it. The other way would be that yes, it can do that, but also the possibility that it's complete is there because this structure can actually be counted in both ways. While I agree that more upside is the reasonable looking count, but it can actually be counted in both ways. So at this point in time, if longs are being held, then based on the entry price, we can keep some position on. I'm pretty sure most of the position has been booked already. It goes without saying because the targets were already achieved. So more or less, the strategy remains continue holding the longs, partial longs, right, and see if the wave Y up is remaining. If it is, then we can start to book out above the 1.10752 or basically above the last high. Nothing really fancy about this. Very simple setup. And those of you looking for new entries, for new longs, we need to wait and see how this price action continues. I am expecting that it might become a sort of triangle or flat. If it does that, it will be very clear. If it becomes a zigzag or something else, it will be a little bit hard to decipher the opportunity. So, long story short, if the market continues sideways within this range, the long opportunities will become much more clearer and much more easier to take. Otherwise, we avoid new longs for now. With that out of the way, let's now head over to our next chart. WTI is crude oil. Again, another trade which did achieve all the targets that we were discussing. Actually, we did not discuss targets, we just discussed the directions in our last webinar on this counter. So, what were we discussing? Let's quickly check. And by the way, this is the chart I have used in the thumbnail of the image. This was a trade opportunity captured in the private Slack group as well. So, what I did was just took the image from there. The trade was rather simple. What we were expecting was that from the point of reference around the price level of 64.243, this is our POR. 64.243, we were expecting that the market is moving up in an impulse, right? And an impulse, we already know the progression looks something like this: wave 1 up, 2 down, 3 up, 4 down, and 5 up. So this was the wave 1 up already complete, 2 down is already complete as well. So what we were expecting was this market will continue higher for this three circle. Now we already know by the fractal nature of Elliott waves that the three will itself have five waves. So these are the five waves inside of the three. So the idea was very simple. We were expecting that the wave 4 will either complete its progression around 79.566 or around the price level of 78.183, right? Once it completes that level, we were expecting an upward movement for wave 5. That simple it was. So it was a long on the idea that we will add partial longs here, and if it continues lower, then partial longs here. Did not get the opportunity to add more, just took off as is, testing a little bit of strength on the upside compared to the normal movement. And based on that, we have actually taken out the last high, which obviously was the target minimum, right? And with that out of the way, it looks like that wave 5 may very well be continuing. I do not have any confirmation to say that it cannot go any more up. And also the movement from here, as I said, looks little bit more strength to the upside. So I'm bound to assume that the possibility of wave 5 continuing up cannot be ignored. And a few things we can do here. Firstly, we can draw the channel for possible targets. Now, in case the market does continue upside, then we can, in the most bullish scenario, expect the market to touch the upper end of this channel. So that also serves us as sort of a target, suggesting that in case of extreme bullishness, 88 can serve as a target for this counter. Right. And secondly, it also gives us sort of a trade setup as long as the market sustains above the lower channel and is able to take out the highs. We can consider it as a new long trading opportunity. Okay. With the target maximum defined, target minimum, we will have to look and see at the price action when it takes out the level or this level and how it does that. So based on that, we have some short-term long opportunities, as well as if you are holding the longs and still are able to manage based on your entries, you can trail partial positions here as well. Let me see one thing very quickly here. Yes. So with this trade, our number of trades captured becomes 70. Again, guys, this was discussed in the last webinar. I have posted the screenshot as well in the thumbnail, and of course, you can just go visit my YouTube channel 50 as Market Analysis. Click on the live section, and after you click on the live section, you can just check the last webinar and see all the trades that we or setups we are discussing here. They were discussed already last week. So with that out of the way, let's now head over to our next analysis of gold. And yes, if you were able to capture this setup, do make sure to let our other viewers know by pushing it in the comment section. So gold, gold. Last time when we were discussing this chart, I was of the view that perhaps the wave 5 is already complete here. By that I mean, one second, let me just, yep, that should do. So what I mean by wave 5 already complete is the impulse starting from this point of reference around the price of 1805. We expected that this impulse, this one up, two down, and then three up, followed by four down, and then the last leg, five up. We were expecting that it was complete over here. Okay, so that was one of the main hypotheses, and to see a follow through, we wanted to see the market at least show a little bit more weakness. One of the signs would have been if the market sustained below the channel. It did not seem to have done that previously. Right now, it seems like it may be continuing up One second. So right now it seems that the wave 5 may still be continuing up. We do not have any strong evidence. It is a little bit below the channel, but this could also just be a spike. So we will have to wait and watch on how this ends. A substantial movement below the channel is what I'm referring to. Small movements can and generally are spikes, like in this case you can see over here. Let me just discuss the scenarios we have thus far. In case the market is still continuing upward and this movement downside to the channel or lower than the lower channel line is just a small minor movement, then we will have a clear long setup near the last high. So that remains 2046. And what I would like to do is place the quick alert here. Right. And secondly, if the market does not do that, then we will come to know it if it sustains considerably for a good amount of time as well as good amount of distance below the lower channel line. If you want to be specific, we can say that if it moves below 1984, then we will be more interested in taking shorts and considering that the upside is complete. Right. So it has not done that yet. So it remains to be seen which count is this counter going to follow. And based on that, we will be looking to plan trades accordingly. We have already discussed the upside as well as the downside possibilities here. Do not think there is any point to add, but if any of the viewers have any questions, they can ask. Otherwise, we'll move on quickly to next chart while I'm just checking one more thing here. Yes. While this looks like a very clear impulse, I feel like an update will be required here as the current leg seems to be, if it's a false movement to the downside here, then that's fine. But if it sustains below this, then I will have to look at this count again as I'm sensing that something might be off here. Anywho, that's about that for gold. Let's now head over to S&P. S&P, as we discussed last time, there was a chance that it was continuing as a possible triangle formation. We already have the trend lines and everything drawn, and it is already, let me remove the clutter so that you can understand whatever we are doing here. Yeah. So what we have over here is the important trend line here. As we can see, the market did go above it once. It did go above it second time, and this time it sustained for a while, but it is not enough to relegate this triangle count completely. What that means is that we are still waiting. If the market takes out 4184, again, this is the data feed I'm using. If your data feed is different, price levels will vary a little bit. So check it at your end. So as I was saying, again, we want to see a clear break above 4185, 4184-ish level. And if it does that, then we will say that yes, the triangle count is definitely relegated and the market will now continue higher. At least we can do some short term breakout or momentum trades in the other direction when it does that. Right? That's the idea. But so far as we can see, it has not given clear confirmation. The movement above the trend line is not that clear, not that definable, and it seems to be interested in going down for now. Right? So that gives us an opportunity for short setups, by the way. I will personally be looking for them if the market goes below this channel. But do keep in mind it's a bit of a risky situation here. It is possible that this market is following it. By the way, this is the triangle count. We have discussed this in quite detail in the last webinars. Just check one of the last 2, 3 webinars recordings. So this suggests that the market should go lower. But here's an alternate count on this chart, which is suggesting that the market has completed a wave one over here at the price level around 4143.45, and then we have a possible flat. Once the possible flat is complete, which it is here, we expect that the market is following in an upward direction as an impulse. Now, if this is the count, then it can go lower a little bit because the wave 4 might be continuing sideways. It can go lower a little bit before taking flight, right? So that's why I was saying that trades or short trades taken here are actually quite risky because of this alternate bullish count which is currently present and cannot be relegated until further information is available. So keep both these scenarios in mind, right? Clear upside confirmation, I have discussed the level. Clear downside confirmation, we do not have a clear confirmation yet. The only clear confirmation is on the upside for now. So for shorting it, we will take small opportunities, or what do you call, not big sizes, only intraday sort of sizes we will take for shorting this counter. Well, that's about it for S&P's 500. Let's now head over to our next chart of Nifty followed by BTC. Well, Nifty definitely seems to have taken a bullish tone. Let me put it there. So last time when we discussed this counter, we were of the view that we need to take out some important levels to the upside, basically 17,790 level. Basically, this high was the important level. As you can see, the market has already done that. We can see twice. Once it went above it, then came back and then went above it again. So it is at this point important to consider the bullish possibility as the main scenario or the main hypothesis. And let's see what the account suggests once we do that. So from the point of reference around the price level of what is this, 16,829, we seem to be having a possible impulse underway. I've currently counted this as a 1 up, a 2 down, and a 3 up, and 4 in progression with the 5 up. Now the thing is, this 3 up is kind of unclear here, because previously I was thinking that this is the 3, this is the 4, and this is the 5, but then whenever I put these counts, they do not behave as what you would generally expect the market to behave in these kind of scenarios. So this is generally a sign of bullish counter. Wave 3 becomes extremely huge, and as you can see, by the way, we are at 261.8 level on this counter already, almost at 261.8. So this blue line, this one is around 17,900ish level. It is 261.8 retracement, not retracement actually, projection level of the wave 1. So far it is showing extreme signs of bullishness. So basically it means that pullbacks will give us buying opportunities. So in case we are able to see a wave 4 pullback, we will very detailed, or let's just say in a very detailed manner, we will look at the chart and we will try to figure out the lower points or the lower part, or if possible the end of the wave 4, to take the longs for wave 5. So basically pullbacks should be considered buying opportunity at this point. And again, the general guidelines apply. We will use the retracement levels 23.6, 38.2, and we will see if the market touches those levels. Those will also be our partial entries for the upside. So long story short, we are waiting for something like this, right? But generally, as I've said earlier as well, if the trend is strong, you can think that this is the 3, this is the 4 which will come up, and then there is never anything like that. And then over here also, I was thinking maybe this is the 3, this is the 4. Then it again did not give any good correction compared to the wave two's movement. This does not even look like a 4. But yes, these things do happen. But it doesn't matter to us because we couldn't trade them, right? Again, over here, same thing. Only trades visible here are short-term intraday trades. So swing perspective, it becomes harder and harder to find trades on these counters. But it is what it is. So with Nifty out of the way, let's now head over to our last chart of BTC. Okay. So BDC, the trade setup we discussed last time on 7th April. So the market was somewhere here. I remember quite clearly that the idea that we were playing or thinking that the market will play is that there will be a sideways movement for wave 4. Actually, we were previously thinking that the wave 4 may have completed here. And previous to that, we were thinking that it may have even completed there. But the long story short, or the whole idea was that anywhere between this price range extended in time, the wave 4 may complete. So price range is this between the price levels of 29495 and 26570, and extended in time means it can go sideways and sideways and sideways before taking off. It has again literally played out, making our tally of trades that have worked in the past webinars to 71. Again, if you guys want to check the actual analysis done in the live market conditions in the last webinar, just go to the YouTube channel and click on the live option, and there you will see the 58th webinar. You can just check it and see the BTC part, which is the last discussion with timestamps we have, so it should not be an issue, and see how the thing proceeded, right? Now, what's it doing now? It is looks like it's possibly a triangle, and our setup was that once the market takes out this high, what is this 29151 something? Basically, this point we will look for longs. Okay, it has done that. The market has gone higher as well. Okay, so nothing new with that, and some finer points we would like to do is make some trend lines here for the sake of calculating future targets. And generally, if the market is extremely bullish, then we can look for market touching the upside trend line. But in this case, it looks a little bit less likely. It does not seem to be displaying that much strength right off the bat. So what I think might be happening is that one second. What I think might be happening is that we need to consider the base or the minimums here, right? So if we look at the minimums, we already have the wave 1 up, we already have the 2 down, the 3 up, 4 down, and 5 complete. So if we talk from a minimum perspective, actually it's a profit booking level. So whatever this is around 30,598, let's say 30,600 ish level, it is already a profit booking level at this point in time. What remains as the future prospects? First of all, if it goes lower and sustains below the trend line, then yes, it can give us a sell opportunity. How? If it goes below the trend line and gives a possible retest over here, then it can give us a possible sell opportunity. That will be the main hypothesis we have. With the sell side, as far as buy side is considered, as long as it sustains within the channel or above the lower trend line, it should itself be giving us clear momentum upside breakout trades. Nothing new or ordinary here. Simple trades that we already know how to capture them. So with that, I would say that the webinar is complete. I would request that you guys share the content of the webinar, the recording link, either YouTube link or my website link, with your friends or colleagues, so that we have more views and we can continue doing these webinars. Secondly, if you are liking this content, do not forget to hit the like button. And lastly, for those of you who are already enrolled in my Elliott Wave video course, there's some good news. I'm adding some lectures which were generally or previously discussed in a project done with the training program or my private classes students, and I'm uploading a part of it which is very important, and actually was a day where I made 120% returns within the single session. So very interesting trades and very educational, consists of a good series of wins and some losses as well. So educational both ways, how and handled not just the account but the psychology during the sessions. So be on the lookout for that. I will also send an email soon with the details, but you yourselves be on the lookout for that and check the course yourselves. So with that being said, let's just end this session and I'll see you in the next one. Thank you. Hey, there was somebody present here online. Well, Jill, nice to hear that.